Markets in short-term blues. All eyes are on the 11th of December, 2018. Markets keen on the outcome of the recently held assembly polls in some states including Telangana, Rajasthan's results widely presumed as a preview to 2019 general elections. Only after clarity emerges on the 11th of December markets may take a direction. The general perception is that markets might hit a short-term setback. In case markets fail to overcome the anticipated setback quickly, there are so many factors that favor markets in long run. Though a few microeconomic and political issues cause negative sentiment, the macro picture is positive, strengthening the long-term outlook. The Reserve Bank in its fifth bi-monthly review of its monetary policy took sound decisions that include the continuation of the current rate at 6.5% among others. It will not maintain the status quo in the meeting after the ad hoc budget, the last one in February 2019 before the general elections. RBI's prediction of lower inflation rate at not more than 2.7–3.2% range is a big relief to the economy that has been worrying of high inflation. This assessment is lower than the central bank's targeted rate at below 4%. We can safely assume that the interest rates would not go up in the near future. The bank's latest GDP estimate of 7.4% for the full financial year 2018-19 is quite awesome. It also took several measures to improve liquidity in the system. In the period of October-November, it made available 1.2 lakh crore rupees for the system through open market operations. Another important decision to go on decreasing the statutory liquidity ratio, SLR, for the next 6 quarters beginning from January 2019 by 25 basis points per quarter and stabilize it at 18% thereafterwards. This decision pumps a sum of 1.5 lakh crore rupees in a staggered manner. More importantly, the change in the lending rate mechanism applicable to personal, housing, and vehicle loans and small loans impart transparency and standards. As of now, under the floating rate method, banks have been offering attractive rates to new applicants only. Existing customers could not get the flexibility as an if. Now, this will change. RBI is to link up floating interest rates with repo rate or with the coupon rate of government treasury bonds of 3 to 6 months to fix a benchmark rate. This new method will come into effect from the new financial year 2019-20, that is from next April. It helps the housing finance sector in many ways, facilitating a low inflation regime, and helps the economy achieve a stable growth. The manufacturing PMI index for November recorded was 54 points versus 53.1 for October. Similarly, the services business index had also exhibited decent improvement at 53.7, that was higher than the 52.2 for October. The composite PMI output index that reflects both the indices recorded a higher figure at 54.5 points compared to 53 points. It is the first time in 2 years since October 2016 both the manufacturing and services sectors shown positive growth individually and combinedly. In respect of employment generation, this November 2018 established a decade's record. On the other hand, industries sector registered the highest growth rate in the preceding 11 months. The Brexit is in the doldrums as the majority of lawmakers, including from the ruling party along with Norwegian politicians, is not favouring the Brexit or the deal in its present form. Though the proposal garnered majority votes in the 2016 referendum which pushed the world markets into a turmoil, has to be finally approved by the UK Parliament. Now, there is a probability of the continuation of Britain in the European Union seems very high. If the outcome of the current uncertainty would be a no Brexit, then it is a most welcome development to the world markets. China acts quickly after the first round talks with America to take measures for reviving import of soybeans and related products and natural gas from that country to create a conciliatory atmosphere for the talks. This initiative by China after the not yet concluded bilateral talks allays fears of the US-China trade war. Markets could now ignore the so-called trade war. The opportunities this week include the merger of GlaxoSmithKline Consumer Healthcare Limited with Hindustan Unilever Limited. As per the swap ratio, shareholders of Glaxo will get 4.39 whole shares for every 1 share they held in Glaxo Company. An opportunity is impending for the investors to buy Glaxo shares at a discounted price. In another development, Kesoram Industries Limited is demerging its tyres division into a separate company, Birla Tyres Limited. The shareholders of Kesoram Industries will get shares in Birla Tyres in 1:1 ratio. The operators are persistently putting pressure on Shankara Building Products Limited. The promoters issued shares at very high prices with unreasonable values through the IPO. Since the company failed to show performance matching the IPO expectations, the shares are facing heavy selling pressure.